Hello, everyone joining. We're just going to give it a minute or two for people to kind of file in, and then I will pass it over to Jennifer and Michelle to get started.
So you guys can see my slide now? And you can still hear me?
Yes, perfect.
Okay, good.
And again, if for anyone who's just joining, we're just going to give it a minute or two for to make sure people have time to join, and then we'll get started. Yeah. Okay. I think we'll probably continue to have more people join, but to be respectful of everyone's time, I want to go ahead and get started. So if you have any questions, there is a chat functionality and a Q&A that you can use. So please feel free to throw your questions and messages there. And then I'm going to go ahead and turn it over to you, Jennifer.
Awesome. Hi. Thank you, Kayla. I'm Jennifer Castenson. I'm the Vice President of Programming at Hanley Wood, and I'm honored to be here with you guys today and want to talk about leveraging technology for affordability, which will be the topic of a session that I will be doing at the Shadow Summit, which will be in September in Georgia, Atlanta, and hope to see you guys there in person. And when we're not doing webinars anymore, won't that be a different world? So I want to go through a couple things first, and then I do have a very distinguished guest with me here, Michelle Boyd, who's the program director at Turner Center for Housing Innovation. So, and I just mentioned the session that I'm doing in Atlanta in September, and we will be talking about technology for affordability. And I do have Molly Feduli with the head of Affordable Housing at Katera, Josh Humphreys, who's with the Housing and Community Development Department for the City of Atlanta, and John Isaacson, who's the CFO of Preferred Apartment Communities, who will be joining me for that session. Affordability, as everybody knows, is the biggest issue for housing right now, and it's being exacerbated by COVID. And many cities are seeing record number of homeless, and there are global organizations who are now getting involved because it is such a big issue. So we're seeing sponsorship, we're seeing dollars from Facebook, Google, Amazon, Bank of America. And when I was talking to, Hanley Wood had a multifamily executive event in March of this year, and it was a small leadership summit. And I asked that group of 100 some leaders what timeline they're preparing their organization for the next recession. And this is like late February, early March. And this is the response I got. And you can see there are 30 responses. And so it's about a quarter of the attendees that responded. And they're all looking at, half of them were looking at within the next 2 years. So I think that this is hitting people at a time when they're probably not as prepared as they could have or should have been, which means that technology is going to be even more important. But then I asked them also, where were they channeling resources, given that they have all these different pressures and challenges? And you can see that 45% of them were developing new technology, which is huge. So all of them are interested in and looking at new technology, which is good for you guys. And then I'm looking at, so what how are they challenging, what kind of obstacles do they have to solve for with that new technology? One of them is the trade wars. And so the trade wars kind of seems to be like on no one's mind right now, probably. But they were super important before, and it's going to be important moving forward. So what are we importing? What are we exporting? And how are we using technology to solve for those issues? And then labor issues. So labor was the number one issue according to NHB. And unemployment was super low when we were talking about this in early March. But now construction really needs experienced workers. It needs those people with the right education. So we're going to be facing that, and how can we use technology to solve for some of that? Then we have density. So a lot of different places are using different criteria and regulations to solve for, to be able to build more density. And now we're going to have sort of a resistance to that. But then how are we using algorithms and technology to figure out parking ratios, single family residential? Some places are opening up to all different types of density. So that again will be something that we can use technology to help solve for. And then there's prefabrication. Right now, only 2% of the homes in the country are built with using prefabrication. And actually, I was on a Housing Innovation Alliance conference yesterday where they were talking about how so many other builders are trying to, like Pulte was specifically talking about how they're getting into prefabrication. We know Lennar is, and then we know a lot of the multifamily developers are also doing this. So I think this is a picture of Katera actually. So many different big, very large players are starting to work on prefabrication, not just for the affordability equation, but also because of efficiencies and cost savings and sustainability element. So 3D printing is another thing that we're seeing a lot of, and 3D printing, not only different parts of construction, and when we focus on 3D printing different parts of construction, we can elevate the type of design and change the type of design. We can think about it a little bit differently, which might mean stronger structures, more resilient. But then also we're looking at 3D printing in terms of printing whole houses. So that is actually happening as well. Integration. There are a lot of organizations that are looking at vertical integration to be more efficient and streamlined and solve and save money. Katera is the number one example of that. There's also Cortland, who's a property management company that is doing also very much focusing on more integration and saving up to 30% of their operational costs. And they actually just presented at one of our conferences about that specifically. AI is something that will bring new ideas for construction in safety, but also in the workforce. So we'll see AI entering into construction workforce and then also in the property management area, and that will also save money and resources. Co-living and co-housing, again, something that will be a huge option for the millennials and Generation Z, who will be hit the hardest, who are predicted to be hit the hardest by this COVID, and technologies to help them manage and find co-living and co-housing will definitely be really important, critical during this next phase. And you can see here the investment in co-living was up 34% since 2018. So there's been that type of investment, and it's going to continue. There will probably be some different parameters around it. People will probably need to know that they are healthy around their roommates, but that's definitely something that will be important. And then the last thing that I wanted to share was flexible spaces. So as we're going denser, as we're going smaller in order to be more affordable, we're looking at technologies that will help us have flexible spaces. So walls that move, beds that go up into the ceiling, there are a lot of different options that will be coming on the scene. So with that, I want to get rid of this presentation. And like I said, I have a very distinguished guest, which is Michelle Boyd, who's the program director at the Turner Center for Housing Innovation. And she's going to talk to us a little bit about what entrepreneurs should be thinking about in and how they should be, what kind of investment or what kind of things they can be focused on for the right investment. So welcome, Michelle. Will you tell us a little bit about who you are and what you do?
Yeah, thank you, Jennifer. So as Jennifer said, my name is Michelle Boyd, and I work as a program director at the Turner Center for Housing Innovation. The Turner Center is a research and policy and innovation center based at University of California, Berkeley, that sits between our own College of Environmental Design, Urban Planning and Architecture School, and the Haas School of Business. We are about 5 years old at this point, and we have three main pillars of our work. The first is research. So much of this is focusing on research that is timely and efficient, that can explore critical questions in housing, in the housing industry. We're really interested in particularly the high cost of housing in regions across the United States, particularly in urban areas and other areas that have seen spikes in the cost of living over the past decade. And so we do research to better understand what is driving this, what people are trying to do to, what governments and private sector leaders are trying to do to address these costs and to propose solutions. So examples of our recent research work include understanding the costs of what is driving the costs of construction. We just put out two pieces looking at this in both the affordable housing industry and the market rate traditional housing industry, looking at line items of materials and labor costs and what is contributing to the rising construction costs over time. We've also been doing research on the accessory dwelling unit space, specifically looking at how changes in policies across different states can impact the production of accessory dwelling units. We're currently working on a study looking at different home ownership finance programs and schemes that are coming out of the private sector to look at what they actually mean for which type of consumers and in which different types of economic scenarios. And on the policy front, my colleagues have been really deeply involved in both California and national policy. Prior to COVID, really focused on putting forth, and still focused, on putting forth creative solutions and innovative ideas in the policy front. So out here on the West Coast, we were really involved in thinking through what was recently passed as a compromise around rent control. Instead of strict rent control, having an anti-gouging cap for rent, which means that rent increases are capped at inflation plus a certain percentage point. That's, you know, a grand compromise in many ways between the apartment building industry and tenant advocates. We've also been involved in many different efforts to explore how government can streamline funding for housing and think about issues of density. The last pillar of our work is thinking, research and policy is thinking about innovation, and this is where my program comes in. So I run our housing lab, which is a pillar of our innovation work. Broadly thinking about how we can support private sector and nonprofit actors in the housing industry in bringing innovation to bear. As would be a surprise to no one on this call, we know that the productivity in the real estate industry has been extremely slow compared to other industries, and we have the same home mortgage products we've had for the past 50 years. We build buildings the same way. And so we specifically look for ways we can incentivize and support innovations in coming to market. So the specific program that I run, which we just kicked off and closed our first year between 2019 and now, we partnered with a couple large foundations, including the Chan Zuckerberg Initiative and the Irvine Foundation, to support entrepreneurs that had innovative approaches to addressing affordability that we believe, if they were able to scale, could fundamentally alter the housing markets. We don't believe in any silver bullet solution here. So we worked with companies across issues of homeownership, credit, industrialized construction, creative approaches to density and co-living, and gave them money, coached them, connected them into our vast network related to in the government and in the private sector in order to help them get off the ground and to scale more quickly. We also, as a policy center, help them navigate the policy challenges that they may face. So that's kind of a broad introduction to the Turner Center and my role, Jen.
No, that's awesome. That's perfect. And actually, and I have a question from Daniel Gaiman. Hello, Daniel. About if and where and how the Turner reports are available. So can you explain that real quick?
Yeah, of course. Everything is available on our website, which is currently being redesigned. So if you go to it, have a little bit of patience. But all of our, if it's, oh gosh, I should know this off the top of my head, but it's at Turner Center at UC Berkeley. And you can search all of the research that we've done around construction costs, ADUs, et cetera.
So you specifically talked about what's contributing to the rising costs of construction. Can you talk about that and maybe talk about what are some of the biggest challenges that we're facing now and how those might be evolving?
Yeah, of course. So generally, I think about the high cost of housing and the housing affordability challenge in two large categories across the United States. So one of them is in cities that are struggling through building fast enough in order to accommodate their growing populations, and other cities that may not have supply constraints, but in which the minimum wage or the average income of most income earners cannot cover the basic cost of housing. A reason I think it's helpful to break it out that way is that if you look at it that way, Detroit actually has a higher like a higher number of renters and homeowners who are cost burdened than San Francisco because incomes are so low comparatively. So I'll focus mostly on the high cost city part, but happy to also explore, there are a different set of solutions, both policy and private sector that address the cities really challenging with income housing constraints. So on the high cost cities aspect of it, it's really multidimensional. Mostly, we think about it across a couple big things. So rapid job and population growth over the past few decades, paired with, at its very basic, chronic underbuilding of housing. In the Bay Area, there are a lot of ratios that try and look at this, but essentially it's the ratio of that there are 6 new jobs or 8 new jobs for every 1 unit of housing. And this has been going on for the past few decades. So we've just kind of reached a breaking point that has driven up the high cost of housing at a very base supply and demand question. So thinking about the cost of construction, and this is coupled with the fact that the cost of construction has gone up. So it's really hard for us to build our way out of this problem. I already mentioned the lack of productivity increases, which has been studied across the country and across the US, of the lack of technology innovation that has happened within construction. This is coupled with an extremely tight labor market. So a labor market that hasn't recovered from the recession. We lost a lot of the building trades and people specializing in the building trades during the Great Recession, and people did not come back. And so it's a really competitive labor market that is able to demand really high wages, which also compounds necessarily because they have to live in these areas where they can't actually afford to live. Additionally, the regulatory environment in many of our cities actually slows and altogether impedes housing production. A study by the National Multifamily Housing Council last year, which is the lobbying association for multifamily builders, estimates that over 30% of the rise in construction costs over the past several years is because of increases in regulation. Specifically, this is drawing out the time that it takes from when you originally acquire and look at a site into when your housing is produced. And that delay causes costs to increase over that delay period. It increases your financing costs to cover for the risk that you may not complete it, et cetera. Requires hiring consultants who can help you navigate the legal process as a developer, that just overall drives up the cost of your units. We've also seen a rise in some hard materials over time, both timber and drywall specifically, that have been connected to these costs as well, kind of all adding up together in order to drive up the cost of construction.
So how do you think how do you think the challenges that we're currently facing with COVID will be impacting just, I mean, you talked about so many challenges, right? All of these challenges, now they're exacerbated by this pandemic. So where and how do you think that will evolve? And by the way, and I just want to make sure that everybody knows, we have several participants, and if you guys anytime just ask a question, so throw it to us on chat or the Q&A feature, please.
Yeah, so how this will be impacted by COVID. You and I talked about this briefly, Jennifer. I think a big part of that is left to be determined as to whether, frankly, our mortgage markets fail. We are at this point where we haven't yet seen the government step in a way to really support our mortgage markets and finance markets for housing. At this point, there's a significant risk for the amount of people who are unable to pay their rent and unable to pay their mortgages in the way of the complex financing system of housing. If they don't pay, and specifically, we've seen in the past decade a rise of these non-bank mortgage lenders like Quicken loans that aren't regulated like banks, and therefore that means that they don't have to keep cash reserves the way that banks do to handle a recession, to handle a shock. And so if they see a complete decline in payments, they won't be able to pay their investors. And so if we don't see at the federal level some way to basically save these companies, which by the way have, really have been pushed to reform over the past decade and really fought it. But if we don't see a way for the federal government to step in and save, we will see a much larger financial crisis in our housing system. And that will dictate how this will affect issues of affordability on this, whether it fails or not. So if we go down the side of it not failing in the next couple months, I think we still face a number of increased challenges with inaffordability. While we may see, there's a lot of theorists out there talking about whether this will push young people to no longer flock to our major cities in the United States. However, if we are at the same period seeing a complete shutdown of construction in major cities and extreme income losses that will take a while to rebound. And if you map that to just a lack of supply and demand, a lack of an adequate supply of housing and adequate incomes of people to afford the housing, it's only going to get worse if we're not constructing and if incomes are declining. So I think we can expect our housing crisis, even if we see a decline in demand for cities, to continue to be pretty extreme in our high cost areas. I think coming out of this, we are going to need to really double down on supporting innovations in construction that can allow us to bring back and build faster. So all the things that you talked about, Jennifer, around prefabrication and modular development, which even though there's been a burst in innovation in the past couple of years in the US, it's still an industry that's very much in its infancy. And many of the companies that have been claiming to bring on cost and time savings haven't yet realized that through their building production. And so I think we'll see a lot of pressure on that industry to be able to come back into operation and to be able to deliver on cost savings and time savings in a way that it hasn't yet been able to, and to do that really quickly to produce the housing that we need. I also think on the homeownership and real estate markets, as I said, it's hard to really predict how that will happen. But I think there is an opportunity, which I'm happy to talk more about, to if we do see a major decline in both their ability to pay their mortgages and potentially in home prices, if we see more of a financial failure, I think there's a lot of opportunity for innovation to make sure that this time around, having gone through the financial crisis just over a decade ago, this time around that the affordable housing industry and mission-driven people in housing innovation can actually take advantage of this crisis, which sounds bad, but to respond much better than we did 10 or 10 or 10 or
How do you mean that they can take advantage of it? What does that mean?
So coming out of the last recession, there was a massive drop in home prices. And there was a concerted effort by the government to allow cities and nonprofits to buy homes and help people stay in their homes. There's a neighborhood stabilization program, a lot of government resources that went into this. and it basically failed. People weren't able to move quick enough. Nonprofits weren't able to get capital fast enough. Cities weren't tech enabled in order to purchase the right houses at the right time. And instead, a lot of financially motivated Wall Street investors, this is the Invitation Homes, this is the Blackstone, were able to sweep in and purchase a ton of single family homes, which is great for innovation and returns, but has involved a further consolidation and ownership of single family houses. In the nonprofit sector and the government right now, a lot of people are talking about, if we are faced with a similar scenario, how can we learn from what we did last time to employ technology, employ new and innovative financing structures, so that more mission-oriented actors who, want to keep people in their homes, who want to keep people on a path to home ownership, but maybe through a slightly different financial structure, can act much more quickly, so that we don't see, again, a giant removal of American household wealth.
So picture me this. So we have, I don't know the exact numbers, but let's say the top 25 builders, and I'm thinking I'm spitballing, but I think this is pretty accurate, build at least 50% of all the homes in the country. So we have these very large developers, large builders who are sitting there, and they have all this system in place. Not only system, but they have all these people who have specific responsibilities, roles and responsibilities. But if they adapt some technology, if they go, let's say, switching to prefabrication as an example, it changes all of that. So how do they make that decision, and how do they make that investment when, it's like this really big they've got relationships with contractors that will then fall apart. They have, their accounting system will have to change. Their construction management system will have to change. So all of those things. So what would you advise in that process? And how do you not only to the builder or developer, but also to the technology person, and how they come in and they sell themselves, knowing that is a big hurdle?
Yeah, it's a great question. And you're pointing to what we didn't really cover at the beginning of why this industry has been so slow to innovate. And then part of it is just the complex nature of everyone along the supply chain, and the way that capital moves within the real estate system, a lot of it within these low-cost debt products that just can't take on that additional risk of trying a whole new method of construction. So I think thinking about moving forward and how to, solve this challenge we're already trying to solve, but even more rapidly and in an uncertain economy, is a really big question. I think there is a role, and I know this isn't always the easiest answer, but for the government to play to de-risk some of that investment. So this could be through incentive structures that further incentivize and secure the investment in more modular and prefab buildings, for example, like underwrite some of the risk of that type of building typology. That makes it easier for some of these large companies to take on that risk. And include like tax incentives for investing in prefabricated technology, et cetera. I think it would be hard for the industry to move really rapidly without some type of risk abatement from the government. And additionally, but within like these, if you're talking to an actual CEO, I think, part of this, as we've seen, that's the industry is really struggling with, is how much should they vertically integrate when they switch over to prefabrication in order to kind of control the level of risk they're exposed to. I think knowing that a mature system, you may not need to vertically integrate because you have many pieces of the supply chain that are ready to produce modular housing, since that's not the case right now. I think we're looking at a period in which we'd be asking these large companies to take on many different parts of the production process than they have typically had, and invest in that right now. And how to actually think about doing that and taking on that risk right now. I mean, I think you have to kind of resort to that it's what's necessary for the industry to survive and for housing production to survive. We've already seen the implications of extremely rising costs of constructions here in the Bay Area. Like construction companies have moved on. Like apartment investors have moved on into other areas because this one is too risky. It's too slow to construct. And so I think if you see local builders thinking about investing in certain economies, they have to realize that someone has to be able to take that risk to invest in innovation, and if they don't do it, another player will, and they'll be left behind. And so I think some of it is kind of both a level of ambition and innovation of trying to stay on the cutting edge, and a sense of communal responsibility and thinking through the importance of our construction markets. However, that's a hard pitch for an entrepreneur to make directly coming into a specific industry. I mean, I think an entrepreneur, I mean, it's in the basic sense, and we coach all our entrepreneurs to do this when working with market rate developers, like at the end of the day, it's just a cost game for them. It is about how you can reduce their risk and reduce their cost. And so I think in thinking about how you're pitching to these companies, many of them are more concerned, don't believe any promises around cost reductions from prefabricated units right now because it hasn't been proven. And so I think really focusing on how you are instead pitching risk reduction for them is a risk reduction, time reduction, and also setting their expectations clearly that some of that may not be realized immediately. I think we have seen some other entrepreneurs, frankly, within the prefabricated space do a big disservice to the industry by claiming that they'll do something really quickly. And then when they can't do it, everyone loses faith in prefabrication overall. And when in reality, it just takes several years for a system to really reach its optimal efficiency.
Right. So thank you, Michelle. That was great. And kind of switching gears here because I have another question, and it's related to greenhouse gases. So how much have you guys been paying attention to sustainability factors, carbon emissions, greenhouse gases?
Some. It hasn't been, frankly, a huge focus of our research recently because of focusing on California, but it is something that we have been tracking, particularly thinking about how modular construction in factories can reduce greenhouse gases through consolidating the construction process.
Mm-hmm. So the question is just about how, attainable housing is, you have to push out of markets, and then, people have to drive further, which, doesn't really make sense. So how can we get more attainable housing in the urban centers is the bottom line.
Yeah. Honestly, I think in this scenario, as much as I push and am a fan of the private sector, I think it's really a policy and societal question. I think in our major urban centers, the less dense ones on the West Coast in particular, people bought their houses in their single family neighborhoods 20 minutes from San Francisco, and they don't want to see their neighborhoods change. People don't like change. And we currently have a political process in which they have a lot of power to stop a development that's next door to them. So I think what we will need to see from state governments, federal governments over the next few years is to take away, frankly, some of that political power from localities in order to make decisions as a region or a state about where it is most best for the climate, best for society, and where to build housing. So I think the private sector can help with this through designing typologies of housing for this infill development that are these like 2 to 4 to 6 story houses, broadly called in the housing world the missing middle, and find ways to produce those cheaply and more efficiently. But it's going to take actual policy change in a lot of our cities in order to make that easier to build and reducing the regulation there. And I think we'll see whether that can be done in the current political environment and the level of support for that, or if it actually requires a sea change in how the public sees the need to build in cities, which, I mean, it's too soon to say, but might be an even harder political thing to push for, given the way the pandemic is affecting dense areas.
public education, it seems like it would solve for so much, and I'm wondering how much it would actually solve for, because, the NIMBY issues and rent control, and there's so many different aspects. So let's switch back to let's talk about the power of collaboration. So how are you seeing collaboration kind of drive change and make forward progress?
Yeah, so I think it's really important, given, as I've mentioned before, the many different players that come into place in producing a building. I think a powerful example of collaboration that we've seen out here in the Bay Area is our largest producer of modular construction locally, Factory OS, has struck from the very beginning a really deep partnership with the Carpenters Union, so that they employ 100% union employees. They have an agreed wage that they pay them at, and they've, through that, the union has invested in a bunch of training for modular construction in order to prep their employees and new entrants into their field into how to work in factories. I think that is a really great example out here, as is in East Coast cities and larger cities as well. Usually modular construction and union trade members in construction fight against each other because often, especially if that modular construction is coming from another country, people see it as taking away their jobs. I think the Factory OS and the Carpenters Union were able to share a vision about a better way of life for construction workers, being able to have a steady job where they can come to a factory, easier work in being able to work on a factory production line, and just frankly more consistent wages. And we're able to strike out this level of a deal that has been essential in that company's, and I think the potential for it moving forward. So I think, and has allowed for broader political collaboration to support this factory and getting the permits to build modular construction and having political support. I think that's one example. I think other examples that we are seeing now for the accessory dwelling unit space in particular, for example, there's been a lot of legislation making it easier to produce accessory dwelling units. There's been a huge uptick in companies that are producing these units at different cost levels and selling them to homeowners, yet we've actually seen very few of those come to market. And so we are seeing increased collaboration among accessory dwelling unit builders and people who are addressing questions around financing for homeowners come together, think through what their shared barriers are that are preventing them from coming to market, and then trying to present a united front on what they think, both from a policy perspective and to the financial institutions, et cetera, can help them get their industry off the ground. So I think that's another example of, normally you wouldn't see a bunch of competitive startups in the same room talking about their shared barriers and challenges. But I think the level, kind of going back to the struggles of innovation, the level of intense regulation in the housing sector requires that type of collaboration, because for this question around like financing for ADUs in particular, likely in order to really open up the market to middle income people, we'd have to see a change in policy from like Fannie Mae or one of the big government financial regulators. And they are not going to move if it's just two startups knocking on their door.
Right.
Because they think about these questions at a huge federal market level. And so I think it is important for these types of collaborations and working groups to come together and like actually prove that the market size is big enough that warrants a change in legislation.
Right. Awesome. So what would you advise will be more important moving forward? Will it be process efficiency or process innovation?
I knew you were going to ask me this question, and I think it's a really hard one. I think my gut take is that it is going to be process innovation, because I don't think we yet know the answers of, like, it's not like we have seen pockets of success in different cities of extreme reductions in cost of construction. Like, we still don't know what works. So I think having entrepreneurs like those on this call and those that Shadow Ventures work with continue to poke in the system to put in new technology, a new process, a new piece of like a new way to develop something into place. So And because it's never going to be a silver bullet solution when we talk about real estate, we need 101 ways that we improve our processes. I think we're still in a place where we hopefully can maintain through this crisis supporting that type of continued innovation and testing.
Well, it was a good answer. So what about, I know you've been involved with the housing lab and everything, a lot of innovations. What have you seen as direct, like quantifiable impact from some of those technologies?
Yeah. So kind of breaking away from construction innovation in this sector, like other types of innovation, we've seen one of our cohort members is a company called Asusu that helps collect data on a tenant financial situation and their rent payments and make that available in a really easy way to multifamily owners. And then they also report rental data to the credit bureaus. They've seen for some of their properties, just by this way of like automating and tracking rent payments, that within 3 months, the average person whose income increases or whose credit score increases after being enrolled, that increases over 100 points. So just by a simple process of inventing the technology that can read these different payment systems, read their past bank statements and identify that they've been paying rent on time, can see a massive increase in someone's actual credit score, which can lead to reduction by as many as 30 basis points or 40 basis points in the cost of their mortgage. So really big, and that's just happened in the past like 6 months or so. I think additionally, one of the other companies we work with is a company called PadSplit in Atlanta. And they are one of the only companies that we've worked with, that we've seen, that is taking this question of co-living and how to make co-living work and trying to apply it to serve very specifically lower wage workers and what's needed for them, and how do you bring a rent that's actually affordable to someone who works full-time at Starbucks. And so they have, in the past year and a half, I believe, 2 years, brought 800 new bedrooms to market in Atlanta. Average price of their renting one of their private bedrooms is around $600. And by, I'm forgetting this number exactly, but that's without a dime of subsidy. And all these are like quote unquote naturally affordable units. And so I think if you are able to, they basically convert a single family home, add a couple bedrooms, and then have a really well-managed co-living experience. And then they add in a few light touch social services to actually support people who, like telehealth, employment counseling that's virtual, credit building through Asusu, things that can actually help people get on their feet in order to really serve their population. And they've been able to do that without a dime of subsidy. So they've gone from 0 to 800 units, and now they're just about to close their Series A and expand to several new markets. So we're really excited to see how that rapid deployment of a model that doesn't require any new construction can really add affordable bedrooms
right.
to high cost areas.
Right, especially in a time period where new construction is going to be even more difficult. So I guess before you go on, you might have another example, but we do have a question. Most landlords do not subscribe to the credit report versions, which include rent-related accreditation. How is Asusu taking on that challenge?
That's a great question. So they are through a couple means. One is just through making it more normalized. Part of that, most landlords do not respond to, like that is true. Most landlords don't take that in. Also, only 1% of renters in America report their rent payments to the credit bureaus. And so it's just frankly irrelevant data for most landlords. Personally, I think the opportunity for that to become more normalized now that the credit bureaus have actually increased the amount of people who are or this vision of increasing the number of people who are actually reporting their rent into the credit bureaus is one thing. Actually doing increased research, which Asusu is part of a couple working groups on this, and there's some of this happening at the national level, to track how people who are paying their monthly rent on time, how that actually is predictive. Recent studies have shown, or kind of early indicators, that monthly rent payment is actually the most predictive thing about whether or not you'll pay your mortgage, over a bunch of other indicators that people currently use about tracking whether or not you'll pay your mortgage. So I do think if we can continue to collect more data, track this over the next few years, and really prove out that as a reliable financial indicator, we can see some change in the market, but it will require collecting more data than we currently have. So Susu is a large part of that.
Excellent. Thank you. And thank you for the question, John. So did you have other examples that you wanted? You covered a Susu and pad split?
Yeah, I mean, we talked a bit about Factory OS. I mean, I think, and how I think the on-site or off-site construction they've, put together all of the pieces for 6 apartment buildings in their factory in the past, I think it's in the past 8 months since they've come up to speed. And so just seeing similar, I am appropriately cautious that a lot of these developments of modular have not come from start to finish and actually proven their cost reductions yet. But I am really excited to see some of the modular housing companies mature over the next year or so. And thankfully they are essential businesses and a lot of them can continue to operate.
Right.
And be able to see them mature and actually prove out some of those cost savings. Because I think from the early indicators, they're there.
Right. All right. So maybe the last question, what problems do you think that entrepreneurs are the most suited to solve right now? Out of everything that we've talked about, where do you think is the biggest opportunity?
Yeah, I think it's something I've been thinking a lot about and how whether or not this has changed in the recent times. I think kind of as we've been looking at the different entrepreneurs that have been applying to us and receiving investment, I think there's a real role at the overlap of fintech and housing, and thinking about how entrepreneurs can help provide financial counseling, financial support, and then we're seeing innovative models around eliminating security deposits and doing it insurance instead, but just finding ways to add in financial innovations in ways that reduce risk and cost to the consumer. Big caveat there is that I think when you're actually talking about new models for home ownership, I think it's actually really hard for new models for home ownership to actually long-term be providing more benefits to a homeowner through a purely private sector model. Because if you think about the default model that's out there, which is a 30-year mortgage, that is already heavily subsidized by the government. And so if you have a new entrepreneur coming in with a new home ownership model that isn't receiving some government subsidy, it's going to be really hard for you to actually bring together the capital required and drive enough value for that consumer to be more efficient and more affordable than 30-year mortgage. But I think it is something that desperately needs innovation, but is really hard. So I think kind of on that fintech spectrum, everything from products for renters and tracking payments and innovations in security deposits, innovations in helping the different transaction process getting up to a home, there's a lot more interesting there. And then I'm really eager to find and support entrepreneurs who actually have models for homeownership that work and reach for lower and moderate income Americans. Because so far, most things just seem to work for kind of the higher income part of the spectrum. I think similarly, there's, I think the question about housing construction and construction efficiency, this is something that only entrepreneurs can solve and only private industry can solve. I think it's unreasonable to think, kind of to your question, Jennifer, that the largest firms will ever get enough capital to fully invest in creating their own ground up new prefabricated construction systems. I think we'll see people who are offering components of that and pieces of the process as prefabricated who then sell to the major builders and construction operators. So I think there's a lot of opportunity for entrepreneurs and innovators to build up and compartment take different parts of those components and processes. I think I am less bullish on 3D printing than others personally, but I do think there's an opportunity, like we've seen with Mighty Buildings and a couple of 3D printers who've actually come up with a new material that is like more climate efficient and more secure in disaster modes and can actually like print roofs, for example, and print a whole house. I think some of that will be really cool and probably most valuable in printing components for houses as opposed to whole houses.
Right.
And so I think kind of recognizing across what I've said, I think it's going to be, I've seen this and we struggle with this, that the venture capital industry really likes to see you solving the whole problem, not just like a small piece of it. And so I think it's going to be a challenge to see how we can attract funding and resources into people who are solving these parts of the problem without getting tempted, like Katera, to solve the entire thing, and realizing that might be a bit too much to take on.
Yeah, right. Well, thank you so much, Michelle. It's been a pleasure talking to you. I don't know if we have any other questions. I think all the questions have been answered so far, but thank you so much for being here.
Yeah, thank you, Jennifer. This was fun. It's fun to kind of remember and look forward to new innovations, and remember we have a lot to be optimistic about.
Absolutely.
So thank you.
Yeah, thank you. And anybody can follow up with me via email. So I look forward to hearing from all of you and seeing you in the fall. Hopefully everything, all the travel bans are. Thanks. Bye.
Bye.
Thank you.